Okay, morning all, or afternoon, wherever you are. And thank you, Ashley, for going through the Forex pairs. And one of the things he and I were talking a little earlier, and one of the things, it looks as though the Aussies are the first ones to raise interest rates. And around the world, that is going to be the thing. So they were thinking this year that it was the Americans, the UK, Europe were going to cut rates, and now rates are going to go up, which could then, well, with everything else that's going on, cause a recession and potentially a very bad recession. So we need to start paying more attention to this. And as Ashley's just said quite rightly about the Japanese situation, and according to Zero Hedge, the Bank of Japan spent 90 billion last week to try to force down the price of the USD against the Japanese yen. And as they're saying, Zero Hedge is saying we'll see you at 170, because now you have the scenario where the central bank, this is what you're fighting. And if you remember Pierre's theory that technical analysis leads fundamentals, then we've been saying to you for weeks and weeks and weeks, do not long the dollar yen at the top, because the probability from a technical perspective that this would reject, and it was also 160, a huge psychological level, but the Japanese government do not want to allow the yen to get any weaker, in which case they have sold yen to buy dollars, or the other way around, to try to strengthen the yen against the dollar. But they look like they're losing control again. And if this gets worse and their GDP, debt to GDP figure is horrendous already, then this could be another drip of what's going on, and why I last week with you guys mentioned I was going to cash. And I'm going to go into that in detail a little bit. Other things, potentially positive thing is that for the crypto world, then the Clarity Act looks as though it's getting a bit nearer. The banks were pushing back because obviously they want to look after their own interests. Trump apparently knocked their heads together. But in view of what's going on around the world, I am also going to sell some of my crypto as well as, and I'm going to explain my reasonings for things. So this was an article on the 20th of April. You can find the recording in my blog, the investing one. And this was the article. And one of the things in my favor, the reason why I seem to do well with investing as well as trading is my entries are very good. And I often get in before the herd. And I covered that in a Substack post recently as well. But the point now is I might be early cashing out, but I am going to cash, and more importantly, I am going to gold. And I'm just in the process. I'm going to be on a podcast soon. I'm writing an article about gold versus cash. And you will note last year, at the beginning of last year, I explained why I was starting to use gold as my bank. I was converting all spare cash into gold. And that turned out to be a very good decision last year, because gold went up 80 odd percent in the year. Then went another 20 odd percent at the start of this year, and now it's back where it was, and it is at an interesting level. And my thinking is, if the world is going to turn to the messy stuff, and there are lots and lots of clues that it is, then I want to be out of cash. I certainly want to be out of most stocks, and I will only be interested in buying back in if we get a significant move down, not a pullback, a crash. And I have been thinking for the last 5-6 years we're due a crash. And I think with this, what's going on in Iran now, we're getting nearer and nearer to the end point. Might be early, might be too early, might miss some of the top. But I made this mistake in 1995-6 to 2000 with the dot-com boom. I was in, I was well up, I was making a lot of money. I was new to stocks, but it was easy. Retrospect, I was in the right place at the right time, got lucky, but I hung on too long, and I sat and watched a lot of the profits disappear, which is why when we got into crypto in 2020, I kept saying to folks, take the stake out, take some profit. This will not go on forever, which turned out to be true. So these are just some of my notes, but why I'm wary with banks as well. And we've been through all of this before about banks. I don't have a great deal of faith in them. And particularly in the Eurozone, we had the Cypriot bank scenario in 2013, when the EU, despite the guarantees from the central bank, were willing to take 6.75% from everybody's bank account to try to help to pay for the Greek debt. And only after there was a lot of pushback did they then only go for people who had more than 100,000, and they took as much as 47% of your money. So if you had more than the limit in, then there was that chance. And the other thing you've got to think on, if there is a worldwide collapse, then government bailouts may not be there anyway. So apart from anything else, I know it's one of these the other way, Pierre said it's very depressing. Well, I'm sorry, but the main thing for people to think about, particularly if you're coming up for retirement now, is just have a plan and do something. Because if you were coming up for retirement in 2008 and you got a pot of money, it evaporated and dropped 60%. So I think we are at that inflection point, but it might not be this week, it might not be this month, it may even not be this year. But managed to be very profitable by hedging with gold and minerals and metals. But today and yesterday and today, I did sell some yesterday. I sold some of my gold and silver miners yesterday. Do I think that that's finished? No, but I think that we're going to get a bigger pullback, and therefore I want to have some cash to be able to buy on a bigger dip. But I have not sold and will not sell any of my physical bullion, neither silver nor gold. And as I just said earlier, I have been converting cash into physical bullion. I've now found a company in Switzerland that I'm just going through due diligence with, whereby you can, in effect, you have a debit card tied up to your gold holdings, and you can use it then as a bank account. And that is what I am going to do. Of course, I don't trust the banks, and I certainly don't trust the governments because they're all bust. So in the post I did the other week, if you go back into here, and I was talking about, it looked to me like a classic rug pull. The big boys are trying to suck retail in, and retail are the ones that always get screwed every time. Retail being you and me. So be very, very careful. This makes no sense at all. We're in a war. Gold is dropping. That doesn't make sense. The stock market at all-time highs. That doesn't make sense. And the stock market, all the growth in the American stock market this year, again, is down to the seven companies, five of which are all tied in heavily with AI. They're all spending squillions, and which means their cash flow, positive cash flow, is starting to go down. We're in a crazy, crazy world at the moment. So at the very least, be aware of what may be about to happen and make a plan based on your own personal circumstances. I will be doing a video this afternoon for members of my investing group, and I will let them know when it's ready. I'll be showing you what I have sold, what percentage of stocks I am selling, what I am keeping, etc. As I said here, I'm still confident I'm invested in the right sectors. And so, as you know, I am in gold and silver. I still have a bit left of my cannabis play that worked out last week. Finally, it came good. Rare earth metals definitely still in. Uranium still in. Can't remember the rest. Somebody fill me in on what I've missed. I'm still in, but I'm taking bits off, and that's the plan at the moment. And as I pointed out here, don't want to watch all the profits disappear, because that, apart from the financial pain, is very depressing. And also, I want to have cash if there is a significant pullback. And again, you've got Warren Buffett's mob still sat on 340 billion. And then another thing I've been banging on about for a while, I am not one of those who believes in just put money in the S&P and live off the dividends, because it doesn't work anymore. And this is a good article by Mike Thornton. You can find this in Substack. And it saves me writing it all out. I have talked about this before. Just put your age in bonds. So if you're 70-year-old, put 70% in bonds for safety. Dear me, that's shocking suggestion. But we'll look at bonds in a moment. And then the other one was, well, this is talking about when bonds don't work anymore. Because when you've got inflation running as bad as it is, if you're going to get paid 3.5% from a bond, and the true rate of inflation is running at least double that, then that is not a good alternative. The other one was that if you had a pension balance, let's say you have a pension balance, you're fortunate enough to have $1 million, and you just withdraw 4% every year, and you'll be fine. Well, that maths doesn't work out correctly today either, because you end up with, you need the S&P to keep going up to more than cover the 4%. But they're talking here that, and I've talked about this for the last few years as well, the yield, the dividend that's being paid out for the top companies now is minute, and they're suggesting here the average is 1.1. So if inflation is running at 5, 6, 7, 8%, the true rate of inflation, and think on with the petrol prices and the knock-on effect that's going to have over the coming months and year, then this figure here is not going to pay you anything. And 10-year Treasury yield at 4%. And then the standard split was 60% in stocks, 40% in bonds. Well, if the stock market comes down and you've got 60% in, then you could be sat on a massive, massive loss. And again, I'll share this in the post. Living off dividends doesn't work either. The average yield we just said is 1.1%. Even I always forget the name. There's a group of stocks that have been paying out for more than 25 years and have increased the dividend every year. It begins with a D, and even they are now not paying out enough. So the thing is, if you're coming up to retirement, and I know there's quite a few in this room who are my age or similar or getting that way, and anybody over 50 or even over 40, you need to start making a plan now anyway, because let's face it, if you're 40, your government pension probably won't exist, so you need to be looking after your own money anyway. And then another old mantra from financial advisors, just diversify your portfolio, and that way that's bullshit. When the market came down in 2008, the whole damn lot came down. And this is why I am scaling out of the mining stocks at the moment, because they will come down along with it as well as. And so again, very good article, explains all the things I've been explaining for a long time. This guy is pitching, I think he's the one that's pitching options. Be careful with them. I have dabbled with it in the last year or so, and I still can't get my head around it. It seems to me one of those things where you can be a very busy fool and you can make money week in, week out, week in, week out, a bit like a scalping strategy, and then one bad trade can wipe the whole lot out. So I don't agree with that part of it, but this is a very good article explaining what's going on and why you need to think differently. And then on the 28th of April, I posted this on Substack explaining how the Iranians had played Trump, and Trump had got all these forces there. The Arab countries surrounding Iran want this sorting out. They were bombing the UAE again yesterday, and hopefully Grant, who's with us, is safe because he lives there. I have a friend who was there yesterday who was supposed to fly to somewhere else, and they couldn't fly because there's bombs going overhead. So just be very mindful. But I said to you in this article, and I said to you last time I was with you, they need to finish this. But the problem is the Iranians are outplaying them, and certainly had at the point of this article. So be mindful of what's going on. But yesterday, Iran has started attacking UAE again. There's gunboats in the Straits of Hormuz. And the concern about their Arab neighbors is that if Trump backs off now, within 2 or 3 years' time, the Iranians will come back bigger and stronger. Grant says just desperate to get out of the Middle of East for good. I mean, Devon was in Dubai, and he tells me it wasn't so bad, apart from the odd missile going past the window. And he was very relaxed about it. But Grant is in UAE and limited as to what he can say there at the moment. But there were a lot of missiles going to the UAE, and it started again yesterday. I think this is a powder keg waiting to go, and I don't think that Trump is going to back off. I explained last week he'd paid nearly $100,000 40 years ago, bemoaning the fact that American foreign policy was weak, and he mentioned the Middle East. Why is America paying to keep the Straits of Hormuz open for the benefit of Japan and Asia, and they don't contribute anything? So he's had this be in his bonnet for 40 years, and if he was to back down, then that really would be losing face. Other things, this guy's posting flights, what's going on in the area at the moment, what the bombers are doing, and by the count of it, if this guy is correct, these refueling tankers are taking off 40 sorties a day, which suggests that they ain't backing down. This is the treasuries. I was talking about this the other week. If it starts getting up near 5%, then this is a 10-year note. Again, 4.45%. Sounds okay. You lend the American government 100,000, they give you 4,500 a year for the next 10 years. But with inflation depreciating, it's not worth it. And inflation spending point at the moment is higher than that anyway. 30-year note. 30-year note now is at 5%. This was the time last time when Trump blinked with the Chinese, and this is the area previously in 2023 when they backed off. I can't remember what happened then, but this was when Iran kicked off and it started again. Anywhere up here, the Americans are having to pay now over $1 trillion just to satisfy their debt. And then another big issue going on here. A lot of what's going on in the stock market is propped up by the aforementioned companies involved in AI. But this lady the other day, she's the chief financial officer for OpenAI, and she's saying that she's worried the company might not be able to grow fast enough to pay for future computing contracts. And these are one of the big beasts in the building. There's the other thing going on at the moment, the court case between Musk and Sam Altman, where Musk claims that the company was set up in the first place to be non-profit. So possibly they could lose that. Probably not, but possibly. Another thing, nuts and bolts. There are not enough electricians, apparently, with the skills in America to help to build the data centers. And they have the same problem in the UK. They need a massive house building program in the UK, but they don't have any house builders. And I think the average age of a bricklayer now in the UK is 50 plus, because they cancelled years ago the apprentice scheme. So there's no young people. The Poles, there were a lot of Polish in the UK prior to Brexit. The best plumbers in town were the Poles. They've gone home. This is the US debt clock. And according to the government now, it's at 39 trillion, 203 billion, squillion, dillion. And per citizen, per taxpayer, if you're from America, your share of the debt of your country is 357,000 on top of your mortgage and everything else. And then the world debt clock. So America now, their debt is greater than their GDP. So the amount that they own is now greater than the total value of their economy. China's is above 100. Japan has been above 250 for years and years and years. And we just looked, they just spent 90 billion to try to push down the dollar against the yen. The true rate of debt, if you take into the cost of unfunded Medicare promises, unfunded Social Security promises, etc., publicly held debt and state debt and pensions, is 176 trillion. And as this guy points out, the death spiral has no exit. It will destroy your wealth within 5 years. And this is the point I'm making. The erosion of the value of what you currently hold is being hammered by inflation. Governments deliberately inflate, but they have lost control. And so if you had $10,000 in 2020, it's now worth 7,700. And I explained last week, since the year 2000, your $10,000 is now worth 5. This is what's happening. If you have money in the stock market, you have money in cash. In cash, it's been eroded by inflation. And in the stock market, if it comes down, it could be extremely, extremely painful. So this is what's going on in terms of the amount of oil that is currently being has become a problem. So the 1973 was the big event. And then, at that time, it was -4. Now they're saying it's -10. And this is from the World Bank. So the amount of oil that is not flowing currently is massive and is way more than before. And when you look back at what happened in 1973, then again, I will share this article with you. But when you look at what happened last time and you look about what's going on at the moment, this could all be about to happen again. This is an article from a guy, and he's saying the Strait of Hormuz crisis just claimed its first victim. And this was Spirit Airlines in America. And then in the EU, Ryanair's CEO has publicly said he thinks that Wizz Air and Air Baltic will be the next to go bankrupt because the price of fuel has doubled from $74 to $150 a barrel in 10 weeks. Insurance doesn't pay out if it's force majeure as well. And again, another article about all of this. An interesting one here from this same guy, George Noble on Substack. As you know, some of you in here are big fans of Tesla, and I have explained I am not. It doesn't make any financial sense to me, never did. And this gentleman bravely is suggesting that it's all a con, and talking about the machinations, how money is tied up going through different entities that Elon Musk controls, and suggesting that this forthcoming IPO could get even worse. So, yeah, interesting point of view. So, whatever, if you think Tesla is the thing still, well, yeah, but, just have a look at what's happening at the other side of the pond and the other side of the equation. I found this interesting this morning. This is Al Gore. Al Gore, who was talking in early 2000s, saying that by 2014, I think it was, that all the polar bears would have gone because in 5 years, he said that all the polar bears would have gone. Well, apparently, since Al Gore was born, the polar bear population around the world has gone up something tenfold. Well, he's now talking about the possible ice age. So the grift that he and others like John Kerry have made lots of money out over the years pitching global warming has now become climate change. And according to this, he might now be pitching it's going to get colder. And this is Leonard Nimoy from a television program in 1979 when they were predicting that we would be going back to an ice age. Scientists said probably would have been the title of all of it. And then the last one is just me on a picture. Devon says, do you think Bitcoin crypto will go on another run? I don't think it makes any sense that crypto is currently going on a run, Devon. But I was talking to somebody this morning that's rumored that there are a lot of shorts at 80 on Bitcoin, and it has struggled to clear 80 yesterday and today. Now, today, we're still in this channel that I've had in place for a while. In fact, I have this set on another chart. I think I had it from here to here, and today has just bounced off the top. Where did I have it? Must have been this one. I had the chart and we were looking this morning and I said to it, oh, crikey, that's where we are again. So we're at 80. It doesn't make any sense, to be honest, at the moment, Devon. I mean, the biggest buyer at the moment is MicroStrategy. They bought another $2.5 billion worth the other day. I personally am of a mind, if we get back above this area here, I'm going to sell half of my crypto. Now, this is based on my age, based on the fact that I've held on to what was left after 2000, and I have added to positions along the way. I do think over time that Bitcoin will still go probably to $500,000 per token, but equally it could go back down to 50 or it could go to zero. So for me at the moment, I'm watching it. I did actually scale out and took some profit out of MicroStrategy yesterday and Coin. I still think that they are going to continue to go up, and I'm not losing faith in the projects. I just want to take some of the profit and put it into gold. Okay, Grant says, excuse me, had to go. Not a problem. Righty ho. It's not all doom and gloom, but it is a fact that the world is in a mess, and those who prepare for it have a better chance of surviving and thriving rather than just sticking your head in the sand and hoping it's all going to go away. I have traded through this kind of thing for 20 odd years. I've been in markets for 30 years. And there's so many signs at the moment that just suggest to me that this is nuts. This doesn't make any sense at all to me. And the danger is if it goes, it could really go. And 6,000, I think, is quite reasonable if we have a crash. And I even have a level down here. So for me, I want to be out of the game, look after the monies that we've made in the last 5-6 years and be protected. And for me, that is my strategy. Okay, thank you one and all for attending. Oh, somebody was asking me about gold. I am looking and hoping it comes back down to anywhere around 4,360. I last year bought more silver than gold, and that turned out to be a very good idea because silver was doubled. Went up 186%, whereas gold only went up 75, 80%. Now I'm focusing more on gold because my thinking is if we go into recession, then the demand for silver will go down, and therefore the potential gain or the safety net of it may not be as good as gold. Whereas if everything turns to the nasty stuff, the ultimate safe haven is gold. So that's my thinking. Not a financial advisor. And you are all at different ages, different stages in life, different levels of wealth. Either you might currently be in debt or you might be currently very wealthy. So I don't know what you're doing. And I can't say to you globally, well, if you're 23 and you want to sell your crypto, that's your choice, clearly. But on a longer term, when you zoom out, and again, I showed you last week, all this nonsense that's been going on prior to this week, the last 7-8 weeks, I really have done very little because I just zoomed out all of it and thought, well, just let them get on with it. And I shared with you before how gold had gone up 1,500% since 22,000 and how the dollar has dropped by 50%. So to me, in my circumstances, this makes sense to me. Righty-ho, thank you all for attending. Ashley will post the recording of his section later today and mine in the morning. And again, if you want some more feedback from the guys, then get into the forum. If you are a lifetime or annual member and you've not had your complimentary session with me or Ashley, then you can book us. And I am going to take another couple of people for private. So if anybody's interested in private coaching with me or with Ashley, let me know ASAP, because we are going to send an email out to the list and there's only a few places available. Righty-ho, thank you all for attending. Best of luck, and we'll see you next time.